Hello, what's up guys? This is Philippe from the Noob Trader, and I just wanted to do a video on gold and just kind of give my thoughts as to where we are right now. I haven't done a video since the press conference with Powell, but if you guys have been following my gold videos at all and my kind of general fundamental takes with gold, you guys all know that I'm pretty relatively bullish on gold, and that still hasn't changed despite the, crazy price action that we've seen there. Like back here, even around 1780 or so, 1790, when we had the initial CPI data come out before we got that big kind of liquidation event happening here, I was uh, I was still positive about gold, and I'm still kind of bullish on gold even when we had the big liquidation event, and then we started finding support at 1750. And although the chart certainly looks pretty negative on the day chart at the moment, right, where we're setting lower highs here and lower lows, obviously that's not looking particularly good, although it may look like that the trend is starting to flatten out a bit here as we got this lower low wasn't as significant as this one, of course, but who knows? You never know with a super leveraged market like gold. But I just wanted to also give my thoughts a little bit as to the Powell press conference last week and what we've seen, and obviously the general outlook from the press conference in the short term is that, what he said was relatively, negative for gold. Um, but because he announced, of course, that, they're even looking at to start tapering asset purchases or tapering bond purchases by, I think it was November, and that they're going to try and announce a date potentially next month. And now it's starting to look extremely serious that they really are going to um, start reducing these asset purchases that they've been doing, which in turn, in case you guys aren't aware, when they're doing this, they're basically printing additional money. They're putting in, basically giving banks more money and consequently just flooding the money supply with dollars, right? So when they're doing that at the rates that they've been doing, it's super, super negative for the dollar. So for them to be saying that they're going to reduce the amount that they're doing that at is obviously going to be more positive news for the dollar. Not as strong as if they were to say that they're going to raise interest rates in November, but it's still something, and it's still like basically pointing into the direction that, hey, now they're starting to seriously consider looking into this. And of course, again, that is relatively, negative for gold in the short term. But again, as I've been saying for the longest of time, um, with my general outlook on gold, I still think that any price below 1800, for example, 1750, even if we're looking at general downtrend, I still think that any price below 1800 and definitely around 1750, 1725, 1700, or even lower, you're just getting really good discount opportunities in gold, in my opinion, because again, from a fundamental standpoint, even if the Fed says, for example, that they're going to reduce asset purchases, the economy is still so volatile at the moment. Okay, economy is still volatile. We're having bad job reports. COVID is still there. Um, Inflation is still high. Okay, it doesn't matter what the Fed says. The inflation is still high, and just the overall market right now is prime for the fact that in the short term, or at least in the short term time frame, like if you're just trying to trade gold, in my opinion, I still think that when you're getting gold at these prices of like 1720, 1750, 1690, or whatever in this range, if you're getting the opportunities to buy gold here, I mean, I think that's a pretty good calculated risk in the sense that you could get these, data points that come out in the market, which is heavily going to swing in gold to the upside, right? For example, if you get a CPI report that's very, very high, that could potentially swing gold seriously to the upside and easily reverse this trend. I still think that fundamentally there's a lot of strength for gold right now, despite what the technicals on the chart, right, as we're looking at here, despite what all of this, oh, sorry, I'm pointing at the wrong thing, despite what all of these technicals are saying, right? I still do believe that. Of course, I could be wrong, and of course, you want to always make sure that you're not risking too much if you're making a trade or if you're making an investment. But that's just my general outlook on the market. At these lower price points here, I mean, it's been a long time since we've seen gold below that kind of price point, right? And I'm not sure if that's necessarily going to change with what's happening in the market right now. Um, Only when they really seriously start talking about raising interest rates and having a set date, which is, either like in a month or 2 month periods of time, would I potentially consider changing my stance and that kind of medium outlook picture. But even then, I think we have to understand where we also are, right? Because just prior to that press conference, man, the S&P 500, as I've been telling you guys, was looking bad. The stock market was starting to look bad, but then we got that recovery, right? Of course, this was also in combination with the Evergrande news, which seriously is super, super worrying. But you could really say that it's starting to look like we may be starting to set a trend of lower highs and lower lows potentially on the S&P 500, right? Maybe we're going to make this 21 day here um, resistance, okay? It's going to get rejected there. Who knows? But my point is that, you know, if the Fed is to do something super, super serious, which is going to, of course, affect gold heavily in the short term and be good for the dollar, like, raise interest rates really soon in 22, reduce asset purchases like significantly by the end of 2021, like doing something like this, yes, it will affect gold in the short-term price, but it's going to cause so much chaos in the economy that's already so fragile that there's kind of like no doubt in my mind as well that gold will rebound, right? Gold gold price tends to love chaos. If the stock market were to start making these lower lows and just like continue on this downward trend because of everything that's going on, the global crisis. You can't discount also what's happening in China with Evergrande, and God knows how many of these companies in China are running at debts that are literally unsustainable. I mean, it's not hyperbole to say that what's happening in China right now could be of Lehman Brothers magnitude on the global economy, right? If something like that were to happen, you definitely want to be long on gold, okay? Maybe not necessarily at these prices, but just fundamentally, you're going to want to be long on gold. You're going to want to be long on gold. Gold will tend to do well initially after maybe a short-term sell-off, right? When people are freaking out, gold will start to do well. And that's the kind of market scenario that you really want to, or that gold bulls like me or like other gold bulls like dream of almost, because it's like, that's when gold performs or like performs at its best, right? So don't think necessarily so much about these super, super short-term fundamental things, which may affect price, to the downside for gold. But I just think that you have to think about it from a short-term standpoint. I don't think that the fundamental narrative is that bad for gold. And definitely from the longer-term standpoint, if we were to see something happen crazy with the stock market or whatever, the play, if anything, if the asset to be in is going to be gold in that scenario. I just firmly believe that from a fundamental standpoint. So have to remember that, guys. Okay. The last thing that I will say as well is that for this general ramble about gold is it was one thing that was interesting to see in Powell's press conference I think it was last week now, right? It was interesting for him to finally almost kind of admit that inflation is projecting to be stronger or, higher than even he could have imagined or that, the Fed was thinking. That was that was probably the most interesting thing that I noticed from his press conference, that there was almost an admission of, hey, wait, inflation is not actually transitory. And they still were talking about how, there's still certain things which are transitory, blah, blah, blah. But there was you could hear that there was a bit of a tone change that I did find quite interesting in terms of how this could potentially affect the market. And it's going to be interesting to see that as more CPI numbers come out, and obviously, as we all know, as it's clear that the inflation problem in America and around the world is pretty serious. It's going to be interesting to see if Powell continues to kind of lean more onto now this kind of narrative that, hey, wait, actually inflation is a problem. And it's going to kind of force him to play his interest rate card sooner rather than later, or really start tapering asset purchases way faster than he expected. That was one thing that I did find interesting, and one thing that you certainly have to be paying attention towards if you're doing any fundamental analysis on gold and the dollar over the coming weeks or so. Okay, so from the technicals, it looks like we're probably going to be making what this 1750 area looks like. It's becoming a bit of a resistance point here. But as I did say, it looks like this lower low situation may be flattening out a bit. I think on the day chart, we really want to see, like, are we going to find support at around 1720, 1725 or so? If we're going to reach that level, it's going to be really interesting to see. Powell is speaking 2 more times this week, if I'm not mistaken, on Tuesday and Wednesday, but nothing, these speeches are nothing where he may, it's not like a press conference after a Fed meeting, for example. So it may not move the market much, but you always have to be aware of those situations that he may say something which is going to affect the market. Um, but let's see how it goes. Let's see also how this whole situation in China plays out, because this is certainly going to have a huge impact on the Forex market, okay? If something serious were to happen with Evergrande or any of the other companies there that are running at ridiculous debt levels right now, as the globe continues to suffer economically from the COVID crisis and all of the economic issues that come as a result of having such a pandemic exist, right? So let's see if we make this support and if this really becomes resistance or we can somehow break through that. I don't see that happening though in the next couple of days. So let's see if we find support here, and let's just see how everything starts to play out fundamentally over the next coming weeks. Okay, guys, if you have any questions about all the stuff I just rambled about in regards to gold, let me know. Leave a comment. I'll happily answer. Sometimes I feel like I ramble and I know what I'm talking about, but I'm not sure if everybody understands everything that I'm referring to when I speak. So if you have any questions, definitely let me know. Consider giving this a thumbs up, and I'll catch you on the next video.